We've all been there, right? A stock is starting to move, your heart starts pounding, and you have to ask yourself, is this the moment to get in? If you get it right, you're golden. But if you get it wrong, you're just fighting to get back to even from the get-go. So today, we are going to break down the 2 most powerful entry strategies to help you nail that critical decision.
And this quote, man, it just hits home, doesn't it? Just picture it. 2 different traders staring at the exact same stock, the same chart. But because of their timing, their entry, one is celebrating a win and the other is just filled with regret.
So, what was the difference? I'll tell you what it wasn't. It wasn't luck. It was all about understanding the 2 fundamental engines that drive the market, the breakout and the pullback. And, more importantly, knowing which engine to fire up and when. Okay, let's dive right into this.
All right, first up, we've got the breakout. I want you to think of this as the rocket launch. It is all about pure explosive power, big momentum, and getting on board right as the thing is about to take off.
So what is a breakout really? It happens when a stock has been banging its head against a price ceiling, we call that a resistance level, and then finally it just smashes right through it. But it's way more than just a line on a chart. What this move really tells you is that there's a huge shift in psychology happening. It usually means the big money, the institutions, are piling in, which creates this wave of urgency and strength that you hopefully can ride.
But here's the million-dollar question. How do you avoid getting faked out? Well, this 5-step checklist is basically your secret weapon. First, you want to see the price getting coiled up really tight near that resistance, kind of like a compressed spring. Then, look for the volume to start swelling up. That's your clue that interest is building. The price action itself will look tight, indecisive. That's the calm before the storm. Your go signal is a big, fat candle closing above that resistance level. And your safety net, your stop loss, goes right below that launch pad. Get all 5 of these, and you've got a high probability setup for catching that rocket.
Okay, so let's shift gears to the second engine. If breakouts are a rocket launch, then think of pullbacks as, well, hopping on a moving bus at the next stop. The bus is already on its route, it's already got momentum, and you're just looking for a smart, low-risk spot to get on board. Now this is absolutely crucial. A pullback is not a reversal. It's just a little dip, a quick breather, inside of a much larger, already confirmed trend. The price is just coming back down to a logical support area before it hopefully continues its climb. So you're buying weakness, yes, but, and this is the key, you're buying weakness inside of proven strength. And this chart just lays out the difference in mindset perfectly. With a breakout, you're buying at the top of a range, betting that a powerful new move is just getting started. With a pullback, you're buying a dip at support, betting an existing trend is going to keep going. One is all about catching the explosion, the other is about joining the procession. Totally different feel, right?
But listen, not all pullbacks are good ones. A healthy, tradable pullback looks like this. First, there's a big move up. Then, on the dip back down, the volume just dries up. That tells you sellers aren't really serious. The move down is slow, it's orderly, it's almost boring. And that boring action is exactly what you want to see, because it shakes out all the impatient traders right before the next big leg up begins.
Okay, so we know what a healthy pullback looks like. But where exactly do we look for our entry? How do we find that perfect bus stop? Let's get a little more specific here.
And this is where a veteran trader, Kunal Desai, has this fantastic name for the key area you need to watch. He calls it the bone zone. It's a really simple but incredibly powerful idea that'll completely change how you look at support.
So, the bone zone is just the area between 2 key moving averages, the 9 and the 20-period exponential moving averages, or EMAs. Think of EMAs as these dynamic trend lines that move with the price. Now, instead of trying to nail one perfect single line, which almost never works, the bone zone gives you a realistic area of support. It's like a landing pad for the price. This helps you avoid getting shaken out on little dips and gives you a much clearer target to aim for.
And this quote right here, it gets to the absolute heart of pullback trading. The real edge, the real advantage, it isn't some fancy indicator, it's discipline. It's having the patience to just sit on your hands and wait for the price to come to you, into your zone, instead of chasing it higher because you're scared of missing out.
I absolutely love this concept from Urban Forex. It's called the grandma test. A really high-quality setup, whether it's a breakout or a pullback, shouldn't be hard to see. The trend should be so obvious that, yeah, even your grandma or your dog could look at the chart and go, wow, that thing is moving up. If you have to squint and search for the trend, guess what? It's not strong enough. Move on.
And that kind of clarity is everything. Because once you can see these setups clearly, the next step isn't just to trade all of them. No way. It's to figure out which one of these engines is built for you.
This table really lays it all out. Breakouts, they offer those explosive, fast gains, but they come with a lot more volatility and, of course, the risk of fakeouts. They're awesome for traders who have serious FOMO, that fear of missing out. Pullbacks, on the other hand, usually offer a better risk to reward and a less stressful entry. But you always have that risk that the trend just fizzles out. They're perfect for traders who prefer logic, comfort, and a more calculated approach.
So let's put this all together. Let's create a simple action plan that you can start using like right away to really improve your entries.
It really just boils down to this 4-step process. First, identify. Are we looking at a rocket getting ready for launch or a bus just pausing at a stop? Second, confirm. Look for those clues we talked about. Is the volume telling the right story? Are the candles backing it up? Third, risk. Before you even think about clicking that buy button, you have to know your exit. Where is your stop loss? And finally, and this is maybe the most important step of all, match. Does this trade actually fit your personality? Does it fit the market we're in right now? Answering that last question honestly is the real key to consistency. And here's one final, and I mean crucial piece of advice. Don't try to trade both of these on day one. Just don't. Pick one engine, the one that really speaks to you and your personality, and just focus on mastering that one. Once you're truly confident with it, then you can start adding the other to your toolbox.
And there you have it. That's the playbook for breakouts and pullbacks. Two very different paths to the exact same goal. So the only question left for you is, which engine are you going to fire up first? Are you going to be the one catching the rocket at liftoff, or are you going to be patiently waiting to hop on the bus? The choice is all yours.